Major failure of a very important support zone. We need to talk about this now. What's up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And tonight, a late night video because we have to discuss this critical breakdown of the support resistance zone that we just spoke about in my last video. So as a follow-up, we are going to run through and look at this breakdown and then see what the 1 day and the 1 week charts are showing us as a result with the indicators that fall down below that price chart, and then try to look at some clues to narrow down those 3 scenarios that we presented in the last video and find out what the next move can be. All right, so the first thing we need to do is get rid of my handsome face. And we will start here on the 4-hour chart where Bitcoin has fallen below 35,000. I thought I was shocked when I saw the 35,000 price. And now here we sit at 34,620 and change with a wick just below. We are just above the low point of this current dip, but this is not looking good. And I'll tell you why. So in our last video, we talked about the possibilities and the probabilities. I thought the highest probability for the next move was that we were going to jump up here and touch this 50 EMA and then fall on down and retest the bottom of this critical support resistance zone that we numbered. I believe it was 3. We had the big one up here. That was number 1. We had the second one that we shot straight through at this point. And then now we are at number 3. And there's one more off the chart that was number 4. But instead of going up to touch the 50 EMA line, we failed the bottom of this zone. I think where we were before was right around this candle here. And so we had 3 green candles in a row where we have 2 that look like dojis. A doji candle is one that looks like this. You have a wick that is vertical and the body of that candle is super thin and it just looks like a plus sign. You see those 2 dojis hiding in between there? A doji candle is usually an indication of indecision or a reversal. So as we were crawling up just a little bit, bouncing off the bottom of this support resistance zone, the 2 dojis were giving us a clue about what was going to happen next. So we got this red candle here, and that red candle was sailing down towards the bottom of the channel right here, but it was followed by not 1, but 2 more little bitty green candles. Not much of a move. We also talked about a stochastic crossover. Here we were on the bottom, and we had this crossover that happened that unfurled, and then we had another stochastic crossover that happened right here. And what did it do? It also failed. We talked about that before, that sometimes when you have a crossover like this one, where the blue line, the fast line, does overtake the red or orange, however you want to see that, and then things tend to move up from that point. And I was thinking that we would get all the way back up here at the top and form another lower high as we got rejected somewhere here along this 50 EMA line. Well, that didn't happen because the crossover unfurled and we headed back south. Okay, so when we look at this crossover here, the blue line came down and then we crossed over a positive again, and then it came down and touched the red line. Then it went up again, diverging from the slow line, and now we see that the blue line has touched the red line again. We have an impending crossover. Is this going to complete? Will it look like this, where the blue line continues down south like this? I don't know. But if it does, this is what we would expect to see with a crossover that takes us into the bearish zone, where the blue line falls below the orange line. Now, downstairs on the MACD, we have some pretty big hints that things are not looking good on this 4-hour chart. Here's the first one. We had this deep red bar on the histogram right here. And then we turned to light red here as we're approaching the 0 line. So they turn from dark red, bold red, to light red when there's a reversal and we're trending back towards the 0 line. Well, then guess what happens? Here is a dark red bar on the histogram again, which says that we have just turned from this momentum taking us back to the 0 line to headed back south again. Also, remember, we were talking about this blue line right here that looked like it was going to take a trip up and cross over and start to move up. And what did it do? We have a divergence. In other words, this blue line has moved away from this orange line. And so these oscillators, which are slower than the ones upstairs, are telling us that our momentum is still in the negative. And I'm going to show you on the 1-day chart where we are not at the maximum depth of how low this stochastic can go. So right now we're not looking good. And I might just zoom out on this chart to show you previous times where we were far below this negative 750 mark here on the oscillators for the MACD. Here's one more thing upstairs I would like to point out. Do you see this big volume node right here? Remember what I was saying about volume nodes pulling the price? So when we sailed down right here, we were being pulled in like the tractor beam I talked about in the last video. Here's the Starship Enterprise, and this is the tractor beam, this big volume node that started to pull the price in powerfully. And now that it pulled it in and we stayed in the middle of this support and resistance zone, here's something else you need to know. When you fall away from a volume node and you start getting down into this area of where we are right now, that's not a good thing, because we are in what I like to call a slip zone. That's when we come off of a node and the volume on the VPVR goes down. So we see we don't have much volume here. And when you fall into this area, price can quickly slip down, much in the same way it did. Let's clear all this out at this point here. When we fell off of this peak node, we ran into this slip zone, where volume dips down and then it comes back up. But the momentum was so powerful, it went straight on down to the next node right there. And we had talked about that also, where if we got pulled back up, momentum might have been able to carry us back up to the 200 EMA if we fought our way back up to the 50 exponential moving average on the 4-hour chart. And that didn't happen. All right, now let's scrunch this in. I'm going to show you some history on this chart so you can see how ugly that the stochastic can get, or the oscillators here on the MACD. Now, we are at negative 750-ish. Look at these other areas down here where the oscillators went all the way down, touching to the negative 2000 line, okay, from 1800 down to 2000. So these are areas that prove that we can still drop further, that this might not be finished. We can definitely go down deeper, as low as this negative 2000, just based on history. And we can't say that it's absolute for sure that it happened in history, it can happen again. It doesn't guarantee it, but it says it is possible. So that's what we want to keep into consideration, take into consideration, and know that it's possible. All right, so let's jump on to the next chart, which is the 1 day, and see how we're looking here. This is ugly. It's uglier than the last chart, and I'll tell you why. Let's get some price history in here. What I said about the slip zone holds true here. We were right here at the point of control price, the strongest volume node on this chart within the visible range of the chart. is at a price of about 38,638. All right. And so now we are falling away from that. And we see that we are into the slip zone again. That is when volume goes down on the VPVR and we don't have a big fat node waiting to catch us or pull us back up. So once we failed and fell off of this POC, now we're like, whoop, and we can slip down through this slip node. So what concerns me is that we only have very small histogram bars here on the VPVR that could be catching points. Notice that we have this node here that coincides with the 3200 level. But compare the size of these volume nodes on the VPVR to what we have up above. And then tell me if you're thinking that we can securely be caught if we're falling down to this itty bitty node. Well, the answer to that question is there's no guarantee. Now, here's why this looks even uglier than the 4-hour chart. Looking at the stochastic, we have a definite crossover and downward momentum and a divergence of the fast line and the slow line. Actually, I said that backwards. The fast line is the blue, the slow line is the orange. Notice how they're getting wider apart and the momentum is headed downward. Okay, we combine that with a crossover right here where it's really a touch point. We didn't even get a bullish crossover. It was a fake out. And now the fast line and the slow line are diverging again. And we are printing dark red bars on the histogram. So as we spoke about in that last video, for evidence of not holding this support resistance zone, the number 3 zone, was that from this peak node here, the peak on the oscillators, connecting the dots here, our overall momentum is strongly downward, which matches the price action up above. Because you'll notice that here on the chart up above, if we scrunch this in, we can see that we have been in this downward trending parallel trading channel for quite some time. There's the upper limit, and then here is the lower limit. All right. And so then we had an upward trending channel that was right here, indicated by these two lines. And we broke below that, which says that our overall trend of downward action is still in effect. All right, so let's look a little bit closer at this chart here. We'll zoom in. All right, notice one thing up here on the price chart. Look at the volume. Volume is tailing off while price is diving. That is not a good sign. That is almost as bad as when you have a huge volume candle here, all right, that coincides with this price candle, this 1-day time candle, and then you have this histogram bar, rather, I call that a candle. This is a big sell-off. But now when we can fail like this, having this massive movement downward based on this slight volume, that's not a good thing because that says that we are showing weakness. All right, so that's the 1-day chart, which is looking very ugly. Let's jump up to the 1-week chart. And it looks worse than it did on the previous video where we were talking about the bear flag. Now do you see what I was talking about? Can you see it? Where we had our flag that was formed by the downward action. And then here was that parallel uptrending channel right here that made our flag. And then we were removing the flag pole and replacing it at the breakout point to figure out what our possible price target would be for a landing spot. And we talked about these two nodes, the one at, let's see what these price levels are real quick. The one at 23,000 and then the one at 20,000. And that's worst case scenario. That's an ugly scenario. But with the downward action that we're seeing, I'm leaving that in the realm of possibilities. It can happen. Now, sure, we could have massive buying action where I believe once we hit the 30,000, 32,000 all the way down to 28,000, we might have strong buying action because there are people like MicroStrategy that could get liquidated once they get down to the 28,000 point. because they're obviously purchasing on leverage. And when you're buying on leverage and your purchase is a long order, in other words, you're betting on price to go up, but then price falls down greater than a certain percentage, they liquidate your position and you're forced into a sell and you have to cover the difference. So if we fail, say 32,000, 30,000, and the big whales, the big investment firms don't snap up those orders to save it, that's where this flagpole could become a possibility. All right, so this flagpole here that we replaced from the bear flag could come into play. Now, again, it might not happen that way, but the bad thing is we definitely have a crossover here with negative momentum. And then we see the stochastic that is around the 30 to 40 mark still has a long way to go before we get into the oversold zone. Where is the oversold zone? It's down below this 20 line. Okay, and we see that in the past, we've had several instances where we've made it down into the oversold zone before we go on these big rallies. We touched on it here, we touched on it here, and we'll probably hit on it one more time there. And we also talked about in the last video that when we extend the 200 exponential moving average line, which might, I guess, after a certain amount of history, if we go back 200 days, I would say that at some point this is going to start doing this, where it could switch directions. Now, the 50 EMA is already starting on a negative azimuth. It's going to go like this. And so what they're saying is, on some of these charts, we might have a death cross, and that's when the 50 drops below the 200. And then at the point where they cross each other right there, that is considered to be a death cross. Now, some are saying that this death cross might happen somewhere in the middle to late May. So it could be kind of down here. So if we drew this again, it might look like, I don't know, let's just say, let's get orange here. Here's the 50 EMA. Let's say it does something like this. And then let's say the 200 EMA. And this is based on a different chart than a lot of the people that are posting other videos, but it would look something like this. This is not exact because my chart, this is the 1 week chart. And the people who are drawing in this death cross, it's on the 3-day chart. So that's why mine does not look like it's going to appear at the same time, because this would be a completely different death cross. Okay. I don't have the capability to look at the 3-day chart, and that's what we see a lot of popular content creators providing TA updates on the Bitcoin action via the 3-day chart, which I like, but that would require me to spend even more money than what I am spending, because I would have to upgrade my TradingView Pro and pay to the next price level to be able to access that style of chart and more indicators. And I'm going to have to wait until I start to raise money. Which brings me to something I wanted to mention. If you want to donate to the channel, there is now a thank you button. And if you want to help me to defray the cost of producing my cryptocurrency and NFT videos, well, you can do that now. And so it is expensive for me to provide this because I have a whole lot of recurring costs that I've got to have in order to make these cool videos and to spend the time to keep the updates coming. I did do a few live videos and I had people that gave me super chats, and wow, I was so thankful for that. But I'm so busy in my schedule, I have not had time to do a live video. And I'd like to do a live broadcast once a week to talk about the Bitcoin action until we get to this death cross and until we get to the point where we turn this thing around and start moving up. So all in all, I think that we're definitely going to test this last zone, which is at what, 32,000? And if we fail that zone, then this flagpole will come into play where we could possibly see a downward move that is very strong that could take us down to these lower nodes. And again, it's all going to be dependent on whether or not Bitcoin can catch itself at that lower zone. Now, let's go back to the 1-day chart so we can look at that lower zone, the 4th zone. Here it is right here. All right, so let's make a big arrow at this zone, and then we'll show you what the price is. The bottom of this support resistance zone is 32,000 and the top of it is 32,800-ish. So that's where I am paying attention. What happens when we drop into this zone? Pay attention to this zone. That will tell us the rest of the story. One of two things is going to happen. It will provide support and we're going to bounce up out of it and head back up to the next strong node. And it could be the big reversal. And if we fail that, then that's where we're really going to have to be careful and understand that we have a possibility of dropping all the way down as low as 20,000. Now, some people might not agree with that, and it's okay. And I'm not saying that I am predicting anything. I'm just reading the chart and telling you what is possible, okay? I'm not trying to say this is absolutely what's going to happen and I am the best crystal ball holder who could predict the Bitcoin market, like most of the big mouth YouTube content creators who claim that they really know what's going to happen next. And that's really sad when we see that because it leads a lot of people astray. And there have been some rather exuberantly overconfident people in the last week who were saying that we were going to have a strong bounce and we were not going to go below 36,000. And it was going to be time to go into this massive bull run. And you probably know who I'm talking about. Lesson is for you that you need to learn. Be careful who you listen to. And always know that nobody knows. No one can really predict it. And it's best to consider the possibilities and look at what is most probable. So in summary, right now, it is most probable that we're dropping down lower. That's all I got for now. Hopefully you found this valuable. And I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And thank you for taking time out of your busy day to discuss TA with me. Let's chop it up in the comments. Let me know what your thoughts are. And please share the video. I don't get a lot of people that tune in and watch my BTC analysis. I love looking at the TA on BTC, and I am very not happy and pleased with a lot of the people who are doing Bitcoin TA. So that's all I've got. This is Carlton, and I am out.